So with that. But really quick, very exciting panel. As we know, we're talking about real estate and the blockchain, and there's a lot of activity going on. There's equal activity going on with the utilization of blockchains for solving problems in the real estate industry, and then separately the utilization of the blockchain for ICOs. So that's a kind of a different topic, but we're going to try to touch on both of those tonight. So with that, I want to kind of get started with getting each of you to give us a quick summary, really of how you're working at the intersection of blockchains and real estate. Really trying to get a sense for, is it out of personal interest? Is it in your business? Where do you see it right now, just in terms of your personal experiences, just to start setting some groundwork here. Ken, I'll let you start.
Hello everyone, my name is Ken DeLeon. I'm the founder of DeLeon Realty, and probably what I'm best at is more disrupting real estate, and I'll talk about that later on. But we do sell a lot of homes to those who are international. Silicon Valley has become a cosmopolitan international marketplace, so I definitely see a very strong need for blockchain, and I think that particularly a lot of countries, obviously China, but others as well, it's very hard to get currency out, and I think blockchain and the potential it offers could be very attractive. And then the transparency, I think, is very much technology and going forward.
Cool.
Hello, I'm Jason Kump. I'm with OFX. I have to say that everything I say today is my own opinion, not the opinion of the company. We've done about $100 billion in transactions internationally, so we're always looking at different technologies. We're a disruptor. We're a lower cost alternative to other providers, mainly banks. In foreign exchange, about a quarter of our business is real estate. So obviously we have an interest in what's happening in real estate. That's actually Natalia Property to see if we can work together and help international buyers come into the U.S. and go around the world. So we're always looking at different angles to improve the efficiencies. Still, because of regulation and some hesitancy on the bank, we haven't gone off of our internal proprietary platform, but we're always looking to do that, and hopefully I think in the next few years you'll see changes around the industry you'll see a lot of things on the blockchain, real estate transactions, finance transactions, a lot of transactions will be on it. It's just a really great technology.
Awesome.
Thanks.
Thank you.
Hello, my name is Natalia Karayanova. I'm the founder of Propi, the company that applies blockchain into real estate, particularly to real estate transactions. Today we're announcing a token sale, which will happen in July, and we're excited about this new wave of our development, so I'd be happy to elaborate on that later. Thank you.
Hi, Bruce Cahan. I'm an adjunct professor at Stanford. Like all the panelists, we speak as individuals. I speak on behalf of myself and at Stanford. My interest is that we have buildings that are built to be smart with no functional memory of whether they work. And so that presents a dilemma to people who would want to use machine learning to understand which decisions were smart 20 years hence and which were not so smart. And to illustrate the problem, imagine you're building on the moon and someone is going to use your structure, adapt your structure in 20 years. They need to know the engineering, all the decisions, the design parameters. Imagine you're rebuilding shopping centers now. The cost to rebuild them being magnified by the missing treasure hunt of information as to how they were built or not. So this is a dilemma that the industry has in playing a game of gotcha, of who has the right data when, and how do I convince them to share it. We have to solve that problem, and blockchain can help with that.
Excellent, excellent. And you have two mics, so we'll try to keep this one on the side. All right, great. So staying on the real estate topic, since that's what we're here to talk about today, let's get a sense for whom are we solving problems for in the real estate industry when we talk about blockchains? Who are those constituencies that we're solving problems for? If I want to start with you this time. You have a mic right next to you.
I'm really happy to hear this question because today the blockchain focused companies usually just want to have blockchain as a buzzword to announce any kind of technology startups. So at Propi, we solve the problem of the buyer, of the end user. That's our main goal. Of course, we help brokers to transact faster using smart contracts, using our technology. We help governments to attract foreign investors because blockchain allows to create a new transparent ecosystem, a new kind of market of the real estate. As we see the stock market today, it's real time, it's transparent, it's global. The same vision we have for real estate. It will be global, unified, with us or without us, and blockchain helps to do that.
Right. So, okay.
Yeah, so we help the end consumer too, right? So that's really the goal, I think, for most companies now, right? So whoever's paying the money, we want to make that as easy for them as possible, cheaper for them, better, faster, cheaper, right? So we see, again, blockchain and any kind of technology that allows transparency and lowers costs as a value add to the end user. And that disrupts industries, right? We've got 7 offices globally doing $20 billion a year. I mean, that's a small footprint for a lot of transactions.
Let me push a little bit on that though. So better, faster, cheaper. Right now, blockchain, at least the public blockchains that are available, the transaction rates or the transaction fees are going up significantly in those ones. So when I start to look at the payments world, where there used to be the big story about blockchains is, hey, they're really cheap, you can move money worldwide at virtually no cost. That's starting to change a little bit. So how does that affect your thinking about that as you guys look at this world?
Yeah, absolutely. So it's funny because a lot of people in the beginning said, oh, well, you guys send money internationally, I'm going to use Bitcoin to do that. I said, okay, you're going to pay 1% buying Bitcoin, dollars to Bitcoin, and then another percent Bitcoin to euros. We'll do that whole transaction for 0.5%. So you're not. So I think that's just a technology solution, right? Once the packets get bigger and the solutions get simpler, that'll eventually catch up to it. So I think that's just a timing element. And right now, it's a new technology, the Cambrian period of the technology. There'll be some that move forward and do better and solve that problem, and others that don't.
Yeah. Cool.
So I think that definitely the end user, the consumer, will be the biggest beneficiary. And I think actually as a whole, there's kind of a major trend going away where I think we need to focus away from the intermediaries and focus instead on the client as a whole. A flaw I saw with real estate in general is that I thought it was created around an agent-centric model. It was built around the concept of the agents get their 6% and they're transacting and arguably not adding much value. So what we tried to do is kind of redefine it and create a new business model, which I'd be happy to talk about later, but designed around the client instead. And instead of being the intermediary, take a step back and think about what would the client want and build a business model around that. And I think you're seeing that both in blockchain and in real estate. And I think that's what technology and just innovative business models that disrupt are constantly doing. And that really, in the end, the client's going to be the winner of all these great changes that are going on. And particularly in real estate, where it's been a very stagnant and anachronistic model that hasn't changed in the last 100 years. It was time. This is a multi-trillion-dollar industry that's been doing the same thing for adding little value, and it's time, and Silicon Valley is probably the place where the revolution is going to occur.
Well, blockchain's been fairly global, so it's...
Oh, more on the real estate side.
Yeah. So, on this notion of the intermediary, you're not, in a way, getting rid of the, even the practices you're talking about, you're not really getting rid of the intermediary. You're redefining the intermediary's role, but there's still an intermediary, because a house gets bought by an individual, sold by another individual, but as soon as you enter the picture, you're not the buyer or owner of that house, right? So you are an intermediary then. Now, you're bringing an innovation in intermediation. And so is that what blockchain is doing in all of this too? Is it a new intermediary that's just bringing an innovation into that middle?
A great question. First, I'd address your thoughts in regard to yes, we are still typically an intermediary. What I've done is I've traveled around the world looking at different countries, different business models that they have for selling real estate. And what I found is that in every country around the world, there was always one intermediary. Some, such as America, you have two. You have the buyer's agent as well as the listing agent. But in a lot of countries, you only have one intermediary. In Australia, it's done via auction. I'll pay 2.2 million, I'll pay 2.25. But everywhere you look, there was always at least one intermediary because I felt that it was necessary. It's the largest transaction, a lot's involved, a lot of legalities. The buyer's agent might be kind of superfluous. Now that information is pervasive, the analysis is there, do need a buyer's agent, and that is the agent that around the world has been sacrificed in many areas. But I think in America now, I'm trying to bring that where the recent evolution is that if people work with us on both sides, we're only charging them half of the commission. So a big plus there. But you had another great point. Is there always an intermediary? Would the agent ever be the principal? And that's the other, I think, evolutionary model, which is the open door model, which is if you look at both buyers and sellers of real estate, they really don't know what they're doing. They only do it a few times in their life. So both are inefficient and make some poor decisions. So actually, could you ever take out one of the principals? And I think the open door model where you approach the seller directly, they buy the home at a discount, they kind of flip the home a little bit. You buy it at 90% of market value to give them the liquidity, and then you sell it directly to the buyer. I think in the future, the traditional model, the cold banker model, is dying, and I think it's going to be either the open door model or the elite team on salary model. But maybe at some point there actually will be no. I think the agents could directly go direct. And in regards to your good analysis, I actually do think that everything we're speaking of is an evolution, but I still think it is kind of a means of there is some cost and it is an intermediary in a way.
Cool. And Bruce, I think you probably view the blockchain and the real estate and whom it's solving a problem for a little bit differently.
Yeah, I do. I think Ken's been focused a lot on the transacting of a piece of real estate that's already built for it to be repurposed. What I'm worried about is, if you listen to a McKinsey report that says that the construction industry is about 4 decades behind in building efficiently, that 98% of all large construction is delivered delayed or over budget, and that the productivity per worker in construction has been basically flat as compared to health and law and other service industries. This is an industry that needs help to get to up its game. And they look at VDC, virtual design and construction, or BIM, building information modeling, and VR to walk through a building before it's built and see that is progress. But the answer is that they can't recall how they made the decisions that they're looking at with these sort of 3D glasses. And who's hurt? The owners who pay the overage, the construction lenders who have to extend the construction loan when the funds should have been deployed someplace else, the tenants who couldn't take occupancy on time because there's a change order that wasn't approved, et cetera, et cetera. So I think there's a lot of room for changing the game of gotcha that real estate has become or grown itself into. It's not something you would allow in medicine. You would not allow the loss of information to play the game of gotcha in a hospital or in some other avenues or banking. But somehow in construction it's been okay.
Well, look, let me kind of drive on that a little further. First, why is it that a blockchain is the answer to that? Sounds like there's a recording and an archival process that just isn't happening. It's not a technological limit, it's a willingness to do it. And B, we're, call it, maybe 10 years into blockchains, just about. No, actually much less than that, 7 if we think of 2010, or 2009, 8. So what gives us the confidence that blockchains will be around to see the 20, 30, 40-year life cycle of a building with the same blockchain and the same data that's been there for all that time? Where do you get that confidence?
So I don't necessarily get confidence in today's blockchain being the permanent architecture, but it is a forcing function for a universal taxonomy of what we use to build, adapt, rent, insure, finance real estate. And so because the technology is so ubiquitous, because it is immutable, the decisions that were based on each other. Right? Remember, real estate is already a chain of decisions. You know, if I go to a greenfield, I'm relying on the toxics being removed from prior use. I'm relying on some land use, zoning, etc. So that's a prior set of decisions, and then whatever I do with the footies and foundations, somebody else is relying on. So we already have an industry that is imbued with a chain of relied on decisions. They're just not used to an architecture where they make that transparent to each other. So we're just sort of engrafting a new technology to a set of trustable activities in a new way. And to your point, relying on any of the vendors. So last week, I was at the Real Estate Technology Conference known as Realcom, Intelligent Buildings Conference in San Diego. You know, when you walk the exhibitor floor, and you've got all these IoT sensors and all this, you know, amazing stuff. And you wonder, will even 10% of these startup, if I incorporate it into a building, would I even know where the firmware to update, download link is? The answer is I won't. So I need data about the performance of the building and decisions that performance validates or invalidates to be permanently available. Much like in geospatial, we have open geospatial specifications. In banking, certainly we have. So there's other ways of interoperable transaction discovery and language that the blockchain as a forcing function puts us to task to use.
Cool, that's really helpful, thank you. You know, with Proppy, you know, I know that you guys are, you know, there's been a lot of blockchain real estate initiatives that have happened around titles and trying to put titles on the blockchain, and I'll touch on some of those in a bit. But with Proppy specifically, what always struck me was that you guys were doing something novel. You are solving an active problem today that is easy to identify, and it's this foreign buyer into a market. And how do we deal with that, the trust issues between them being away from the property and the property they're buying. So can you talk a little bit more about specifically how you view or how you're utilizing the blockchain in solving that problem?
Sure. So we use Ethereum smart contracts to make the online transaction online and automated. Today we have many middlemen in one real estate transaction. We have several brokers, as Ken mentioned. Sometimes there are 2 brokers here in the US, and there is another broker at the foreign country. Then we have escrow company, title company, banks. Everywhere this foreigner should go personally, sign some papers, meet people. The foreign buyer even cannot just leave the country. He or she should stay here for a couple of months to get the title deed still. So the culmination of the purchase is title deed. But our smart contract allows to connect all these entities that don't trust each other, and the evidence of this lack of trust are multiple fraud cases in the US. So we help them to execute the transaction on our platform. Each party, like title agent, escrow agent, broker, seller, and buyer, they have a dashboard. So they execute what they need online, and smart contract sends notifications to all the users. We use the money transmitter in order to make the payment online. And thanks to this technology, we have the real-world data that is being sent to the smart contract to allow other users to understand that the conditions are met. And when the conditions of payment and paperwork are executed, we are transferring the ownership on blockchain. So currently this blockchain ledger for ownership rights serves as a secondary database to the current land registries, to the current databases in the US. But our goal is actually this land registry on blockchain to become global, to become a standard for other countries. We see the adoption to happen first in emerging countries where they don't have this complexity of regulation, and they also don't have the efficient land register at all. So for them it's easier just to jump over this complexity as in the US and to use the blockchain ledger. So yeah, that's one point of using the smart contract for executing all the steps of the real estate transaction and allowing all the middlemen to trust each other, because they don't trust us properly as a company, they trust blockchain. We have several cases of escrow companies approaching us. They have cases of frauds when the payment is being done to a fake buyer, and title insurance does not cover this loss. So they approach us, and we tell them that we have a right technology. They just need to have an account, and they have a dashboard to participate in the transaction. And then the next step, we see that the US regulation is being approved, and even land registries in California from last year are allowing technological companies as ours to electronically submit recording all the title deeds. This will allow us to entirely eliminate title companies in the future. Also, escrow company to be eliminated is quite easy for us as a FinTech company. So our goal is at least to cut the number of middlemen from 7 to 3. That's the first application of the smart contract. And then the final vision and why we're doing this token sale actually is to have the support of the blockchain community to further develop this smart contract and to achieve peer-to-peer transactions in real estate when we cut even more middlemen and make real-time purchases.
Awesome, thanks. You know, on the title insurance, that's a fairly big lobby in the government today. So good luck with that. It's not going to be trivial.
Yeah, title insurance is a $20 billion market today with 4 main players taking 90% of all the revenues.
Wow.
Yeah. And it's really a good industry to disrupt.
But like you
Also,
said,
title insurance exists only in the US, not in other countries.
right, and I was going to say that's almost the more interesting aspect here. That actually, I'm reminded of a story. So, quick segue. I'm reminded of a story that a young gentleman in this room told me several months back, and it was about the notion that skipping technology, like you said, in certain, in the U.S. we're accustomed to a certain way of life. We're accustomed to certain processes being common. We think of the stock market as being, hey, this is the way it works here. But the reality is, in a lot of countries, it's not the way it works. It's not a trusted ecosystem. And real estate is one of those places where there's not a lot of trust everywhere. So where we might view blockchain as, wow, we have to be redundant with existing systems, in some of these countries, it may actually be bringing a system that never existed.
Exactly.
And that's really the benefit that you can bring here. So adopting something as you start to work with it in another place could actually be even a bigger win.
So,
Yes, here.
Yeah.
if I can just jump in just real quick. I mean, to continue what Natalia said, there is a place in a post-blockchain world for title insurance. And that is to give a master policy of the pre-legacy, transactional history before the blockchain. So just like we have mortgage title insurance transferred with the promissory note, and mortgage, so this would be securitized. You can imagine that the industry would be creative enough with a little bit of urgent to issue a master policy that over time the premium of which would scale down as they wean off the 21 years kind of risk that they have. So they don't have to go away initially.
That's a good
They
point.
can take a few decades to go away.
No, that's a really good point. I think that's a solid way of looking at it, because you're right. And look, initially those premiums could even be higher. They go down over time, but so yeah, that's a really good thought. There's been a number of initiatives. I believe there was something the Economist had a cover story on Honduras. This was about a year or two ago, and that was a company called Factum was working on it. We haven't heard anything about that for a long time. Bitfury, the large mining company, is involved in the Republic of Georgia, and they're doing a large blockchain land title initiative, which we haven't heard very much about either. More recently, we've heard of a company in Chicago called Velox that's doing something in, I think, one of the counties in Chicago.
Cook County.
Cook County, okay. And so, as I hear all of these things, I'm trying to reconcile in my head, are they solving different problems or are they solving the same problem? And how do we reconcile whether or not this is what the industry needs? I mean, have you heard of any of these, first of all? And if so, any thoughts on what they're trying to do?
Yeah.
I'll throw it to the group because
Natalia's probably the expert. She tells me about the other guys too, so we hear it from her.
Yeah, sure. There are several companies, blockchain and cryptocurrency companies that have been in the industry for quite a long, in this young industry, like Bitfury, Factum, Consensus. And as I was commenting earlier before, many of blockchain companies were just looking for some verticals to apply the technology. So they know that it's really promising to introduce blockchain for asset transfer, particularly for title deed transfer. So they are trying to solve a problem with title management solely, without thinking actually how it could be incorporated in the purchase itself. And this is why we don't see much progress, because they go in the field, they try, they do a few transactions, and that's it. Local governments, they don't see fast, instant benefit of introducing this new title management. And this is why I think we still don't see many progress in adoption. Although there is a company named Cromaway in Sweden, and we are receiving news about their progress there, and they're solving one particular problem to avoid manual mistakes when recording title. And yeah, so these are the companies that are trying to solve the problems. We are also building similar technology for title management, but it's only one piece in our smart contract.
Cool, no, that's great. And I think that the common theme between the way you're doing it and Chromaway, as opposed to some of these other participants, is that you are in effect taking the existing documentation and just making it more, maybe call it the notarization of that information, and then maintaining it around for it to be referenced and transparent to the parties involved in the transaction.
Yes, that's correct. We're mirroring the current databases that are public, and then all the future transactions, we are recording them. We are also convincing current counties to integrate with our ledger so that they have only one new column in their database that will have a hash on blockchain. So these counties and land registers can say, yes, we adopt blockchain technology, but they literally don't do anything. They just put a hash from our source. And this is the way our blockchain ledger to become a primary source of evidence in the future. And the county-centric and government-centric ledgers databases to become secondary and to become kind of backup of our ledger, local backups.
Ken, are you seeing, some of these fraud problems that Proppy is trying to address and some of these other solutions, are you seeing them as, are they rampant? I mean, is there a rampant foreign buyer problem in the real estate world today? Where especially, you got here at Palo Alto, very expensive real estate. If foreigners are buying, this is, multi-million-dollar properties. Clearly, if a fraud happens there, it's a big deal. Is this something that happens a lot?
First, I want to compliment, I'll tell you, on trying to disrupt the title industry. I only can disrupt one industry at a time, but it was ripe for disruption. It actually used to be done by the government, but then the Great Fire of Chicago in 1906 burned Chicago down, including the title records, and that's how Chicago Title, which is one of the biggest, came about. But really, there's no need for it. It really should be disintermediated, so good job there. In regards to fraud within our area, it was more rampant, particularly foreign investors. That was more started in 2010, 11, and 12. And what you would see a lot would be funds that supposedly would come in, title would transfer, and then the funds later on were found to be, fraudulent. The title companies only have about a 5% claims rate. So you look at hurricane insurance, 90% claim rate. Title insurance very low, but at one point it spiked up to 5 from down to like 1 to 2%. But then they've taken a lot of precautions where now if there's foreign money coming in, it has to season with the escrow company for a little bit of time before they'll actually do the transfer. So I just had a client today from China. His transaction was delayed because the title company required a lot of extra things, documentation for both him and the lender to deal with just to avoid these issues. So now you're seeing less fraud, but more inconvenience for the buyer. So I think it's not an optimal solution. It's just kind of a means to the end. But I think that there's a way to have a fraudless transactions, but also efficiency as well. And we're not there yet, but we're getting there.
So is in that particular case, would a blockchain have played a role in that Chinese buyer's transaction that might have mitigated the need to hold their funds for so long?
Definitely. What you see on all sides is a lack of trust. A lack, even when I have my clients are still, it might be a referral from a friend, but still, who is this American person? Do they have my best interest at heart? They don't, these, title companies, there's so things that they're not used to in their own country. So it's a lack of trust by all parties. Some of the sellers are leery of money coming from overseas. They'll give a discount to an American buyer over an overseas buyer because of that lack of trust. So if we could have, through blockchain, kind of trust kind of implicit in the transaction through everyone using the same forms and the same transactions, then I think it would be a win for everybody.
Great. And Jason, for you, you're also dealing with the movement of money based on kind of what Ken just described. So how does it feel for you? Do you see that the use of the blockchain to put all this information in as something that gives you, your company, and OFX greater certainty of what's going on?
Yeah, sure. And I'll just kind of back up a little bit. So about 30% of our registrations, client registrations, we turn away. So not that they're all fraud, but it's just we don't feel comfortable. And we're a big enough company where we don't have to accept everyone. So we'd rather keep our fraud rate as low as possible.
Sorry, can you elaborate on why 30%, or you push back? Like, what's the reason?
So there's a couple different things. So when people register, we have KYC, AML regulation that we've got to do. That's required, and then we have our own policies that we do kind of on top of that, just that we feel comfortable. So we'll speak to everyone who registers, and it's funny just speaking to someone, like you'll have someone go, "Hi, this is Sarah, my $2 million property," and they're like, "Okay, can you send an ID?" And it's obviously not Sarah, right? But they might have sent in the documents, right? So there has to be these extra precautions. So things like that will happen, or an IP address will be Nigeria, and the guy's saying he's in Australia, and we're like, "Sir, it seems like you're logging in not from Australia." So it's funny, if we could have it where the blockchain could acquire all the information. We ask for a lot of information, especially on larger transactions, right? Especially real estate, you need proof of sale, proof of purchase, some other stuff. Have that all in one combined factor and somehow identify back to the original source, to the person. That would definitely be a big benefit for us because we spend a lot of time, and we're pretty efficient. And we still spend time and energy kind of getting all that data together and get all those documents together. So yeah, it definitely could be great for us too. You know, and great for the end consumer because that's just easier, it's faster. Right now, maybe it takes 1 day, maybe 2 days to fully comply someone. So maybe if it could be 5 minutes. That's the other thing, people expect that. To your point, right, people don't expect to have to season their money for a few months. They expect transactions to be happening, they expect everything to be quick. You know, some things will take time, but I think the blockchain and all the smart contracts that we're doing can save a lot of that time. You know, that's really what the big benefit is.
Well, I got my fingers crossed. If the transaction times we're seeing in Bitcoin and Ethereum, I think Ethereum stopped, the GDAX stopped trading today at some point because the transaction volumes on ICOs was out of control. So my hope is that we're early in this technology cycle and a lot of these bumps in the road get resolved, because if we start putting all this stuff, and you know, today we're talking about real estate on the blockchain. 2 weeks ago, we were talking about music on the blockchain. You know, I spent some time 2 weeks before that with people on financial services on the blockchain. I'm like, whoa, we can't do an ICO on the blockchain. How are we going to do all these things? So fingers crossed we get past these challenges.
I'd like to add a point about the blockchain technology in real estate, why it's fascinating to apply, particularly to real estate. We have the transaction cost on Ethereum, on Bitcoin blockchains, but it's really insignificant for the value of a property. So this is why real estate is a really perfect industry to apply. Also, when we talk about the delays of the transactions on blockchains network, then also today a real estate buyer should spend a couple of months to make a transaction. Here we could wait like 15 minutes.
So far, we've been doing our best to stay in our Silicon Valley bubble. But let's think about a different use case. We've just started a project in 24 slums in Fiji and Indonesia, where there will be granted land tenure likely to the slum dwellers who upgrade sanitation and water facilities of their village. So you could imagine trying to transfer title to former informal settlements / slums without what Natalia has suggested or we've been talking about. So if you post-disaster Haiti, or think of another vulnerable region where we're always talking about the 2 billion on the planet without a bank account, without this, without the same 2 billion people all the time, giving them the security of knowing that they have land, that their improvements are recorded and legal and will not be subject to extortion if they want to maintain them. This is a huge opportunity. So real estate, Ken's clients, one set of users. The kind of bottom of the pyramid or developing country users, this is a significant human right of land tenure that could be vastly improved and made more regular using a technology such as this.
You know, I hear that. The challenge I have with a lot of those thoughts is around the notion that for these people, just having something that says they own that land is tremendously important. They did an experiment, not an experiment, there's an initiative in, and I want to say it's either Ghana or Nigeria, but I believe it's Ghana.
Ghana.
Yeah, where they literally gave them titles, but paper. Because, you know, telling somebody in Ghana who's never had this, who has to, you know, walk miles to get water, that some computer in the sky that they've never seen, they have no computer themselves, has a statement in there that says that they own that piece of land is kind of worthless. I mean, I understand in theory, yes, it is great, but they don't have that. And so,
but
you know, if you're going to point to your cell phone, again, the people I'm talking about don't have that. This is not that group.
We're in a transition phase. When I get visited by the Kenyan Sustainable Bankers League, where M-Pesa is, It's coming.
Yes.
When we have constellations in the sky to deliver ubiquitous internet to remote places, it's coming. And so you're right, it's great in the last generation to have a piece of paper, in the next generation they're buying cell phone credits and believing whatever the bank account balance is in their phone. So, yeah.
That's fair, and so I would concede on that point. And so, timing of all of this. So if we had to throw it out there and say, hey, what do we think? Are we talking about next year, 5 years, 10 years? Anybody willing to go on the record? On the record, baby.
Her ICO is in a month, right? Is that what's happening?
Oh, we'll get to the ICO in a second.
We have a roadmap in our announcement, which is to bring the efficiency to the current real estate purchases by the end of the year in terms of the product, and then peer-to-peer transactions for the first time to happen in 2 years. Of course, talking about the global registry to be adopted worldwide, who knows? But still, I believe the world and the technology is moving us to more unified world. So I guess like in 5-10 years, if not us, probably other companies will evolve and will develop this global lead registry.
I think I read, really skimmed through an article about India putting a lot of the information available, like they're allowing a lot of private data to go out on like a virtual social security card with a lot of information. I think that's a good step, and I think they're trying to leapfrog the technology so you don't have all these documents you've got to show. You guys people scan documents, send them in, and I think that kind of combines the digitalization of the world and individuals, and then all their purchases on that digitalization. So I think that's coming. It's coming, I think, quicker than.
Well, I know in
than
cash,
expect.
for money in India, it's already beginning to happen.
Exactly,
I forget
right.
the company that's dominating, but there's
Yeah.
already.
Yeah, and so then that's backed by the government there, and so I think that helps it along as well. So they're helping all their citizens, right? The people that don't have it, normal bank accounts and stuff like that. So I think that's a good initiative. It'll be interesting to see what happens there. Yeah.
Bruce, futurist hat.
I work on space banking, so I think you guys are on your own here. And seriously, I'm sure you'll get it right after 3.5 years and counting. So yeah, I would expect that when real estate, and I'm speaking about construction industry, AEC industry, sees that parallel industries like finance, like insurance, are moving very, very quickly to blockchain implementations, experiments with R3, etc. These adjacencies to the real estate industry may put some pressure on real estate to get rid of the traditional frictions, some of which Ken has talked about it, but also to stop the game of gotcha, because ultimately what real estate wants to do is be a commodity. And you can't commodify something that is so uncertain as to how it's created and transferred. So 15 years, 20 years, we will see much of this result.
Thanks for the sober response. You were trying to throw, you were going to try to get away with it, huh?
I was
Look
gonna
at that,
pass it
doesn't
along.
want to be a huge
Yeah.
futurist.
So, I mean, the good news is blockchain is getting a lot, I think, public acceptance. Seeing Bitcoin recover and do so well, people are talking about it again. I like what Bruce mentioned, where I think in the end, real estate should be more of a commodity. Real estate is a phenomenal investment in Silicon Valley, and beyond appreciation, it's the liquidity and the kind of ease of transfer that makes it so attractive to people worldwide. But I think that still the transaction cost, as well as the lack of trust and uncertainty, are hindering it to really evolve to the next level. Part of the reason why I'm trying to elevate the level of service while reducing commissions is that my clients aren't transacting enough on real estate. Traveling the world, studying real estate, no country subsidizes real estate, primary homeownership as much as America, $500,000 capital gains exemption, deductibility of the mortgage interest, deductibility of your property tax. But people don't transact very frequently simply because of the 6%, the lack of trust, escrow fees, things that really are unnecessary and should be reduced. So I think as a whole, you're going to see transactions, costs going down and trust going up, and I think blockchain evolution will be part of that. I would probably be a bit more, I'm probably in the 5 to 10 year category.
Yeah, you know, I was, while trying to do a little bit of research on this, I was running into a token that's going to be going called a BEX. And what their vision for this is the ability for people to have fractional ownership of buildings, commercial buildings, so like the Chrysler building, and being able to move in and out of ownership of that through a token model. So, I mean, that's one area that I'm seeing some innovation, and maybe sooner rather than later, but what do you?
Definitely. Kind of analogous, there's something called a 1031 tax deferred exchange where if you sell an investment property, you can defer your capital gains, but you have to buy another investment property, and the timelines are very tight, 45 days to identify. So a lot of people are forced and they don't know what to do. But there's something that allows fractional ownership, DSTs, Delaware Statutory Trust, which effectively they allow you to do the 1031 tax deferred exchange, but you can own a fractional interest in 1/100th of a shopping mall, or it could be a conglomerate of 100 residential properties and a couple Walgreens, but you can own a fractional interest of that. And that is very attractive to people because a lot of people want to own real estate. It's just they don't know what to do, how to remodel, how to take care of the toilets and the trash. And if you can have this fractional interest and professionals can take care of it. And again, going back, people are very drawn to real estate, but there's a certain skill set that they don't possess because again, why do it? You only transact 1 to 3 times in your life. But I think the future is kind of giving the benefit to the client by removing the client from the kind of overseeing and the maintenance part. And I think this fractional ownership is a strong direction that way.
Awesome. I want to make sure that everybody's, if you have some thoughts and questions, that you start thinking them up. I'm going to ask one more thing and then kick it over to the other side. So let me quickly, pessimistic or optimistic on blockchain for real estate. And I think I know the answers, but I still want to hear you say it because we're on the record.
We're talking about Earth, not space, right? Yeah, no, I am. You assume the Earth survives. Yes, I'm optimistic, and especially as you hear panels like this, as you see innovators like Natalia, folks are passionate because they see it's almost like science fiction. The standard script in science fiction is people suddenly wake up and realize they've been in a system that makes no sense, and they want to change it. And then the hero comes forward, or heroine, and says, this is how it's going to change. So we're at the beginning of that experience, so I'm not optimistic.
You better be.
The nature of an entrepreneur is to be optimistic, and I've been an entrepreneur since I'm 19 years old, so that's definitely my nature. But seeing the governments adopting blockchain, even those governments that are highly corrupted, is really fascinating. We see how Russia is now inspired to meet Putin personally. We see Dubai announce the vision blockchain by 2020 to be implemented in all the administration. So seeing the governments that are usually moving slow to willing to adopt this technology gives the highest optimism to me.
Yeah, I think I'm optimistic as well. For blockchain, for a lot of things, it's an open ledger. Voting on blockchain, government financing and procurement on blockchain. There's a lot of things that could be, it'd be great to see that and have analysis come through with big science, with big data to show you what's going on. I think that's the real estate side too. Once you commoditize it, you packet it, it's out there. It's great to see. So I think it's inevitable, just how fast.
I'm very optimistic. I actually think there's going to be a huge amount of disruption within the whole real estate field in the next decade. That's why I left law, because I think the amount of time that is going to, the explosion that's going to occur, real estate in 10 years, the whole business model is going to be completely different. And it's exciting to be part of that, and I think that blockchain will hopefully eliminate title companies, and also I think fees will be going down, service will be going up, And the biggest beneficiary of everything we've spoken of will be the client, the end user.
Awesome, great. Opening it up for questions. I'm going to pass the mic to you just so we make sure we can hear you. So we'll start with you.
Question, I guess, for Ken and Natalia, and I don't know if OFX and the professor would want to comment, but you mentioned, where's the moderator? Digital assets, music, financial services, this stuff is, yeah, digital assets on a digital blockchain, no problem. Transactions, money moves, we're done. Property registries, we're talking about real assets, physical land where people live. And when things go wrong with these registries, which happens all the time, maybe less so in Silicon Valley where multimillionaires double check the maps, but in real life, there is a high rate of fraud in the US. People do get agitated when their properties are bought and sold. There is tremendous risk of litigation. And my question is, let's assume, which is a huge assumption, that a county or a nation like Ukraine, which was left out of the list, decides to put their registry on chain. How does that transition work? And I love the idea of a large title insurance buy down, that basic buy off, we should probably call it. But how does that transition? That's not a, hey, dump the data in, hash the Ds, throw them on chain. By the way, there's a backlog for that. But we're talking years, if not a decade or two, to transition from an existing registry. In America, a database. In Ghana, dark rooms full of rotting books. To do that, how does that work? Have you thought through, I mean, I love the idea that you're starting high end, but you're building this global registry that a nation could just call you up and adopt. That's pretty exciting. But how would that transition work? And have you guys really embraced the complexity of putting real assets on a digital chain? Because I think people gloss over that, but it's non-trivial.
Sure, great question. Thank you so much. Yeah, of course, we have already developed a prototype for the case in the US, and we've been transacting the ownership in-house with my previous company for 12 years. So we've been writing title deeds. We know a lot about different types of ownership in real estate. It's a complex subject, indeed. This is why we are first focusing on specific groups of real estate. It's residential property, the buyers are foreigners, the properties are existing. So we focused and made the solution to work for a particular group of buyers and particular groups of the properties. And the transition works in the way I mentioned before. The first scenario is when the existing land registry just adds a hash from our ledger that we have developed. The second scenario, an emerging country which doesn't have any efficient land registry, they just use our ledger as a primary database for asset transfer. So it's a matter, it's not a software company not a software problem in transition. It's just a matter of choosing a scenario of that kind of a transition.
So, I actually got to participate in an analog version of answering that question. When the wall came down and Eastern Europe became independent, the Housing and Urban Development sent folks like me and Lincoln Land Institute folks to Estonia and Latvia to instantly suggest that they have their real estate enter the economic flows, which was different than the Communist Party officials deciding to write themselves deeds. And one of the potential solutions at the time, because you're right, the records were specious at best, was to use the Torrens title system. And if you recall, way back in American land reform, Torrens was this actual parchment in Chicago and elsewhere, where you had this physical representation that passed from grantor to grantee. Where you in Philadelphia, I grew up in Philly, the way that they laid out the original old near Independence Hall land was there was a 6-inch overlap in the lines between the properties. So each property encroached at least 6 inches, sometimes 12, because that was the sophistication of their surveying at the time. We now have remote sensing, LiDAR, the rest of it, GIS. So creating a synthetic, modern title plant or survey of land, we can do that really quickly. But we can lay into that the competing claims and try to sort those out using computational law, which we've not talked about, which is another aspect of computable contracts that we work on at Stanford's Center for Legal Informatics. So there are possible interventions for the transition that are worth looking at, especially in developing countries, where we're getting the land into the circulation to pump the economy's activities as collateral, et cetera, all the things we know is really, really valuable.
Bruce, but the one challenge that I kind of see in what he's bringing up is the mechanics behind doing this. The interests of the title are in the government's interests. In other words, it's theirs. You know, we live on the land we live on by the grace of the government because they are the ones who mowed the lawn. I like to use that term, right? So at any point it can be taken back. Now, when we start to look at countries like Costa Rica, where land movement happens all the time. If you're too close to the water, they take your house. If you're, then they'll move the lines back, and you can move your house back over that line. These are things that garbage in, garbage out of databases, right? So if the government's the one in charge of getting it into this modern system, then if they decide to put it in with all of the things that aren't really right about it, it's just going to stay. It's just going to actually, now, it's going to memorialize the abuse that the people had on their land.
You know, as somebody who had to read old deeds in New York City, really old deeds, no tallow plant, you know, things that were pre-zoning and building code. Some of that stuff falls away. I mean, it's still in the deed. You'll still get a title report that has it. But last time I checked, in Gramercy Park, there are no horse makers, you know, horseshoe plants, etc., or tallow plants for candles. So some of this, yeah, there could be garbage. You would do a quiet title action at some point. As a real estate lawyer, you would bring a quiet title action to ask those with adverse claims to prove their rights. And maybe by open notorious use, they could do that. Photographic evidence, they could cop. But over time, that photographic evidence would have to comport with a remote sense Landsat image of that from space. It might not. And as we get very sophisticated remote sensing for cheap, you can line that up with the claims that an automated land registry has and say, it's not the same history of land that we see. We see no evidence from infrared of space that there was ever a building footprint here. So what did you use it for? Target practice. So yeah, I agree that there will be a bring it on, you know, all the adverse claims that this process of transformation might trigger. Just like a will, when it's read, somehow you ended up with 20 more relatives than you thought you had. But it's okay. It gets solved. That's what courts do. It gets solved.
One more question.
Any takers?
So as a lawyer, real estate is the ultimate non-commodity asset. It's the classic example of a unique asset. And so I'm kind of interested, as this discussion has gone on, hearing about how the idea is to turn it into a commodity. So how is this technology going to, and from my point of view, the metaphor I would use is digest the sort of ultimate non-commodity asset and turn it into an asset, into a commodity. How is that going to happen?
So we need to make this brief because we haven't need to finish up, sorry.
So very briefly.
Sorry, the good news is, he's our host.
So we're gonna answer his question.
So, as I practice at Wild Gottschall, so thanks to Shepherd Mullen for the digs here. Mortgage securitization is a commodification activity with a rating of AAA, whatever. And that rating is a signal that the commodity has been created for the market to compare investments and diversify. Real estate used for finance purposes, as Ken's clients are doing, as creating savings accounts here in the form of housing, that is a commodity. They could put their money in another savings vehicle. They choose to use real estate for that purpose. So it's a commodity.
Yeah, I agree, and also the ability to make the ownership mirrored, ownership right mirrored on a digital asset will allow us to transfer it between people, and this what makes the ability of real estate to turn into commodity.
I would say from a third party looking in, I think if you had all the variables of all the houses in, number of bathrooms, marble floors, wood, all these different things, and then you can start parsing out, so look at it a different way, and then you can start commoditizing very specific. That'd be my view on it.
Admittedly, homes are unique, people get very invested in them, but what you're seeing though is now, I think, a standardization of pricing. Usually you can predict what a home will sell for within 1 or 2%. There's liquidity that it has that it didn't have before. So I think, and I work with a lot of my clients, I think the sums involved in purchasing in Silicon Valley are so large, people think of them less that this is the home that I'm gonna raise my family in. They think of that, but also this is where I'm gonna be investing $5 million. Will this, alternatively I could put that, money into stocks, or I could put it into bullion or any sort of other opportunities or commodities. So I think that it is unique, they're not fungible, but I think there's certain components that are making it more of a commodity. They'll always be unique, but the speed of sale, the uniformity of pricing, the lowering transaction costs and more fluidity within the transaction are making it more of a commodity. It'll always be unique, but I think that kind of the difference between buying, Google shares or a house are blurring. It's going to be less so. And I think Bitcoin, where people feel more trust. There's a lot of uncertainty regarding housing. Going back to the gentleman's point, there's a lot of, over half the lawsuits in real estate in the nation are within California. There are some issues that are unique to real estate, but I do think the process of making it more of a commodity has been occurring that I've seen in my 15 years in real estate.
So I wanted to thank all of you. Thank you so much. I appreciate that you've taken this time to educate us.